Hello everyone, this is Juan Sarmiento and today is Friday, August the 5th. So, sorry about last week. It turns out that I was preparing for my exam for my driver's license here in Spain, and that's not an easy task. It's one of the most difficult exams you could imagine, but fortunately I passed with flying colors, thank God. Okay, so that's out of the way. I still have my driving test, but I think I could prepare with some less complications. In the meantime, let's examine what we have here. Because I missed last week, I can see that I have some illegal shares. Okay, we can figure out immediately what that is. I'm going to review all of my current trades. We have C, that's what is that? Is Citibank, Citigroup, okay? The stock jumped very nicely, and well, as you can see, that's not the one with a problem. We have the August shares expiring. How long before that? 7 days. We can do a rollover, and because we are close to the cone here, we can just do it automatically. So I select the two short options or legs of the trade, and I say analyze rolling, and just do that. I can delete this for a minute, and okay, so we're gonna move forward, but we're not gonna move to the next week, because then we'd have to do this every week, right? So I'm gonna move it to September is the next month. You can move it to September the 16th or September the 9th. That sounds good. And I'm gonna get $1.83 times 100 is $184. Okay, and you can see that now my deltas become 105.64. Without it, my deltas were negative. With it, my deltas are positive. Okay, so let's do this first, and then we adjust. If we need to, we can adjust the calls here, reducing the number of calls in order to get some money back. But for now, let's just do the rollover first of all. Okay, and you can see that it opens then at September 9th here, and you would see it here, and it's about to get filled very soon. If it doesn't, we will adjust the number here. Okay, so that's C, that's fine. Let's go to Costco, analyze, and here again we have August 12th. Looks great. We have the same scenario. We have profit, and we can easily do a rollover here, and it's 7 days to expiration. You can see that here, and so it makes sense to, because we are so close to the cone here, it makes sense to do a rollover as well. Analyze rolling, and we're going to do this to September the 9th, same thing, and in this case we get a whole lot more credit, okay, because there are less options. As you can see, it's more expensive, it's a larger strike price. Okay, let's do that. 16.29 sounds good to me, and the deltas go from negative to positive, but we can adjust that. Okay, confirm and send, and once these things get filled, we will make the adjustments. Let's go to CSX, and here again we have August 19th. Okay, to August 19th, that's 14 days. There's no hurry to do anything about that, and as you can see, there is no assignment. What I mean by assignment is if we went over the expiration date, you may find yourself with options on your turn into shares in your account, and that seems to be one of the two of the trades. We'll get back to that. In this case, CSX looks great. Delta's 129. I don't need to make any adjustments because it's not over the smiley face. If it went instead of here, which is at the apex of the smiley face, if it went over, then we can make some adjustments. For the time being, we don't need to do that. Let's go to DG. Okay, here is what happened. Here we had delta. First of all, delta is negative, and you can see that I have short shares. Well, if this is an IRA, your broker will be contacting you and telling you, hey, you have this negative shares, you can't have that in an IRA account. If you have a cash account, only if you don't go too high above your buying power. So you have to think about that. Your broker will call you, send you an email or something like that. So it's no big deal. In this case, because I don't have, this is a paper trading account, the broker would not call me, okay? But all you have to do is turn this into a short. Okay, so let's go to the monitor tab, account statement, and go back a few days, let's say 7 days, and see what happened. You should be able to see DG transactions, and there must have been an assignment. Let's go back a few more days, let's say 10 days, or let's 15 days. Okay, here it is. And we're talking about DG. It's not showing it here, it just says automatic expiration. And you see that the amount is 23,000. And you see that's 230 times 100, that's 23,000. That's where that comes from, okay? So we can tell where that was assigned. And obviously, you know, because it's a short position, that what got filled was the expiring call option, negative call option, that right there. And we have this call here. So this call could be used to close the negative shares by saying analyze closing, and that's a covered call. And then you end up with 2 puts and 1 call at 250, and we are above 250. So we could close this if we want to. Let's take a look at the chart here. What do I want to do? Well, earnings are coming up. Let's take a look at the here, the DG. We have year to date $120. So I'm just gonna close this. We have a little profit. I'm happy with that. I don't want to go over the earnings. We can wait for the earnings, and if it happens something, perhaps at that point after earnings, we could re-enter the position. For now, let's just close this by closing this cover call. We have the 230 call, which is there for a reason, to cover that 100 shares. And your broker, if you leave them the instructions, you can tell them, in case I get assigned, please use my long calls to close that position as a covered call, and they will do that for you. And you can see that's $225.33 debit. So I'm paying a whole lot less than the $230. Okay, so let's confirm and send. And I got the C field. Let's go to that, okay? C. Okay, so right now we can ignore this, that's the position, and uncheck those, and then that gives me a better look at where I am. Do I want to take some of these calls off? I don't really. It looks fine the way it is. You can even go to the monitor tab and go back 150 days or something, whatever, it doesn't matter, and see what my orders were. Okay, I just got that filled, and that was the original plus the rollover. Let's take a look at analyze trade and analyze trade. And so we hide the position, and this gives us our current position. Okay, we have done $181.16 on it, and now we have a nice delta, and as you can see, money has been made. So I just wanted to show you that this is a profitable trade. Now we can delete all that and show our position the way it is right now, and I say this is fine. The deltas are below 40, which is good, and a spike in volatility would make us additional money. If the market collapses here, volatility would spike. If the market continues on higher, we would make delta gains. Right now it's 109, and I don't really need to adjust that at all. Okay, let's move on to GS as we wait for the others to get filled. GS, August 12th, okay, that's 7 days from now, same kind of situation. And we have 24, very close to profitable, to break even. So here's my position, my entry, so I can analyze that trade. High position, and this is my trade right now, $24 loss. Okay, you can definitely wait until next week if you wanted to and see if that turns a profit, but at this level I'm not going to get too conscious about $19. I will call it close to break even, and I could roll it over, and this is a good trade. It's a strong mover, so let's analyze that and show all, and simply do another rollover to September 9th. Analyze rolling, and we change to September 9th, so it is 30 days to expiration, a little under 30 days, August. Yeah, a little over 30 days. You can say August 9th or September 9th or September the 2nd. I'm going to go with September 9th, and that gives me $9.85 times 100, because we have one lot here, and that will be $988 collection credit to my account. And if we hide the position, this is what we end up with. Okay. Even as we speak, this is coming down. Great, let's just do it. Okay, I close that, confirm and send. It's not allowing me to do it. Okay, this is because I have insufficient, the illegal shares have not been filled, and we need to get that DG resolved before we can move on. So let's do this, cancel replace, and just open the limit here, and we keep increasing until we get it filled. Okay, that was just filled as I was talking. Okay, so let's do the GS. Let's repeat that. Analyze trade. Now it should be working because the DG just got filled. Okay, and okay, what we need to do with the DG is to close this. Let's do the call first, and let's go to the mid area, and we can do the put as well. You can put it to the mid, and if it doesn't get filled, you at least have those puts that are way out of the money. That's a lottery ticket, and now it got filled. Great. Okay, so now we're out of that trade, and let's go back to GS. We should be able to do this now. And now it's turning positive here. $12, $9, $8. Okay, let's confirm and send. Okay, now it's accepting it because we dealt with the short shares. It wasn't allowing me to enter new trades. Okay, now I have some potential trades here. Let's examine them one by one. Let's go to the trade tab or to the analyze tab and enter ADP, and I'm going to discuss it and tell you why would I do this. Okay, big jump after earnings. The earnings, as you can see, is better than expected, and is, I'm going to write it down, 1.478 versus 1.5. That's not a whole lot of difference. It's very, very close to the expected, but it went up more than 10% anyway. It went from here, the bottom, 217 to 245. Okay. 217 to 245, that's, let's see. Let's get our calculator here. 245 minus 217 divided by 217. Yeah, that's 12%. Okay, so that, I just want to do it by memory. That's our earnings movement after the earnings, more than 10%. Okay, that's rule number one. Rule number two is the earnings beat. Did they beat by a wide margin? Not really. 1.5 minus 1.48 divided by 1.48, that's divided by 10 is 1%, or times is 1.35%. It's not that big beat. You can see that the volatility is at the low end here, is at 23%. That's probably close to the bottom here. Let's go to the trade tab and scroll down, and you see 22%. Well, that's not exactly. So two of them are close but no cigar. The earnings wasn't that great. Okay, that was GS. It got filled. Excellent. And that frees a lot of capital. Now we have a buying power of $70,000. And okay, so let's say we resolve to make a trade on that. Is this a liquid stock? I like the fact that the volatility is low here, relatively speaking. So let's go to the trade tab, and I'm gonna go to November, 105 days, minimum should be 90. And I'm gonna select the 140 as a strike price, and I click anywhere here and I say buy custom Gini. And you can look that up in my previous videos on how to create a Gini trade with a standardized custom order. If not, you can simply pressing the control key and click on the options that you want to buy and sell. Okay, so this is my trade, and you can see I have 28, 24 for the longs, 23, 22 for the shorts. So then I go, okay, let's go to the calculator again, and I'm going to first calculate the back month options, the volatility here under at the bottom corner where it says vol, and that's for the top options. Okay, so we say 28.25 plus 24.01, divide that by 2 and store it in memory. Then we calculate the average for the other two, 24.07 plus 22.28, divide that by 2, and then 23.175 minus, sorry about that, minus the memory recall, 26 equals almost 3%, not quite. Okay, so that's acceptable. Okay, if this was 3% or more, then it wouldn't be acceptable. So I'd say, okay, this is acceptable. Now I have to calculate I create a trade, create duplicate order, and you can see the mid and the natural. So calculate difference. So we go, the mid is, the natural is 41.8 minus 40.1 divided by 41.8 times 100, and that's 4%. That's not good enough. That's more than 3%, and so that's another negative. So all in all, I say, well, it's not worth it. Okay, so I'm passing on this one. All right, let's see what else. ADP is very, very close to what I would have wanted. Let's go to UNH. And they reported earnings very nicely here, and let's start with that. The estimate was 5.24, and the actual is 5.57. Okay, so we calculate that. We enter the actual minus the estimate divided by the estimate times 100, and the earning speed was 6.3%. 10% is my cutoff point. Okay, since they reported earnings, it was at $451, and it is now, the high was 543. Doesn't need to be too exact. And so how much was that move? Well, we have 543 minus 451. Okay, I have to repeat that. 543 minus 451, and divide that by 451 times 100. That's a 20% move. Great. That is 200. Okay, so we have a 20% move and on an earning speed of 6.3%. Not bad. The volatility is here at the low end. Let's go to the trade tab, UNH, scroll down, 29%, that's a little high. Okay, so that's a strike against it. 29% is a little high. Okay, so let's do the trade, calculate the trade. Let's go to the trade tab, and we're gonna choose here the December will have to be. Strike price is 531. That seems like far away. And let's see. The cost will be close to $10,000 just for the one. Okay, so that's a little on the expensive side. And we have 27, 23, 24, 23. Again, calculator. Let's clear the memory, and we're going to enter first the back month, 27.66 plus 23 plus 0.4. I'm using here this number at the bottom right corner of your screen, and divide that by 2. That's 25 on average. I'm going to save it and do the calculation also for the front month. 24.21 plus 22.97 divided by 2, and we subtract that from memory and then recall it. I just clear my memories accidentally. Okay, let's put that in memory and do the front month again. Okay, let's subtract that to memory and then memory recall. That's the difference, okay? And subtract by 23, and that's 8%. I think I screwed up, but it seems like a little too high. The difference $119. Yeah, that's like close to 8%, so that's not going to work for me. Okay, let's move on. Another option that another trade that I was considering is Amazon. Okay, Amazon. Oops, that's not Amazon. Here, okay. So as you can see, volatility has dropped after the earnings, and the earnings was negative, but don't go by that because they revenues were, and going forward they were guiding higher. So you would have to go through the history of the earnings, and you would see that it was better than what the actual earnings simulate. So I'm going to ignore that, and let's go straight to the trade. And I would have to go to November, and the strike price will have to be 140 by custom Gini. And in this case, we have the back month is too high, 40%, that's too high. So I'm going to skip that as well. This is a deal killer. If the options are too high, the volatility is too high on my back month options, then I have to pass. Okay, the next one is Apple. And we have traded Apple in this year, so let's go to the Analyze tab, Monitor tab, Account Statement. And Apple, so far we have lost, no? Year to date, yes, we have lost $1,000. Can we make up for that? Well, what matters is not what we have done before, but whether it fits my my requirements for a new trade. So I have the calculator here, and the earnings came at hold on a second. Here, 1.138 versus the actual 1.2. Yeah, that is not that big, that difference. 1.138 minus 1.2. Yeah, difference of 0.62 divided by 1.2 times 100, that's 5%. It's not that big a deal. The let's see the volatility here. Go to the trade tab, scroll down, and 15%. That's good. Okay, that's acceptable. Let's go to the Analyze tab, or the Trade tab will do, and look for, where are we going here? We are going to November the 18th, and my strike price would be 165 by custom Gini. Analyze that trade, and that looks good. 24.31. Let's calculate. reset the parameters here. Okay, because there we go. I'm going to adjust this so you can see where I am. Okay, that's my strike price. My cone here goes to 500. Okay, let's look at this calculator again. So 31.57 plus 27.55. Again, look at the bottom right corner. That's the volatility of my back month options. Divide that by 2 gives me the average, 31%. Let's clear the memory and add that to memory. And then we calculate the front month, 27.4 plus 24.75, and divide that by 2. Okay. And subtract what we have in memory. It gives us a difference of 4.98. Divide that by what is in memory, gives us 0.16%. Okay, times 100. Now, let me see. No, this is not right. 31. I'm going to write it down. 31.06 is the average of the back month. The front month average is 27.38 plus 24.89. Divide that by 2. Okay, 26. Okay, minus memory recall equals 4.9. So that's larger than I would hope. Okay, so 31.6 seems like a lot. I'm gonna redo this. Sorry, folks. 31.49 plus 27.06. Divide that by 2 is 29.275. And the front month is 27.31 plus 24.92 divided by 2 is 26.115. So that's okay. Now I'm gonna subtract the back month is 29.275. That's 3%. That's close to okay. Close enough. Okay. I would say 3% is my rule, but I'm gonna allow it. And let's go to the trade tab, and 15%, that's good. Okay, so let's go to the analyze tab again, and this time we're going to create the trade, the order, and see what the difference is. Well, obviously Apple is as liquid as they come, right? But just so you know, the natural minus the mid $30.2 minus 29.98 is 0.22. Okay, if that was 3%, divide that by 30.2 is next to nothing. Okay, times 100 is not even 1%. So that's liquid enough. And then now we create the trade, create duplicate order, confirm and send. You can say multiple accounts, so you can adjust the quantity here. And we're gonna go 10% of my account is $10,000. Let's do this. $8.99. $8,994. It's less than 10% of my account, so I send that off. Okay, and the last one is CSX. Again, earnings, the stock went up from 27 all the way to 32. Okay, let's calculate that. 27.6 was the low, and the current is 32.74. Okay, so is that good? Well, if it moves more than 10%, yes. So 32.74, that's the high, minus the low, 27.6, divided by the low, 27.6, gives me 18%. Great. Okay, what about the earnings? Did they beat by a wide margin? We come over here, put our cursor there, and it will show us that it was 0.47 versus 0.54. Okay, so calculator again. The difference between 0.54 minus 0.47, that's the difference between the actual and the estimate, and then divide that by 0.54 times 100 gives me 12%. So yeah, that's a good earnings beat. The volatility is right here at the low. Let's go to the trade tab, scroll down, and you can see that's 24%. It's a little high. Normally I would accept 15, but in the conditions, the market conditions we have, yeah, it's a little high, but we're going to deal with it, live with it. Otherwise we'll never get any trades. Oh, wait a minute, I have a CSX here, don't I? Okay, we already have a trade, don't I? Yeah, we already have a trade, so there's no change, no need to change that. But I noticed that we have, see the smiley face? We are above the smiley face, so we want to neutralize the deltas. Is 284. The stock is close to positive, but hey, let's take some profits off the table. How do we do that? With so many options here, all you need to do is sell a few of the calls until not 32, perhaps 2 or 3. You're looking to neutralize your deltas. Okay, here's my deltas, 53. That's a little high. We want to neutralize it so that if the market collapses here, that's negative. I don't want it negative. I want it positive. Why? Because in case the market goes up, I keep on making money. But if it collapses, volatility will help me a little. So I want my deltas to be, 53 deltas is a little high, but not too bad. Okay. So I'm gonna get a credit of $1,080, and that's good. And there, completed the trade field. Okay, let's move on to, let's verify our trades here, that we still have cost here. I should have gotten the credit already, I haven't. Let's adjust the Apple to raise it, to get it filled. Okay, and let's give it a couple of points there. And I will keep on there, the Apple is filled, but I will keep on trying to get the Costco done. I'm completely below the credit that I'm asking for compared to the mark, but it's not getting filled. And let's look at it. It's still a wide range between natural and mid, and generally this is why you don't want to have a wide margin between mid and natural when you enter the trade, because then when you have to get out of the trade you get this issue. Okay, fine, we're gonna increase or decrease our request for credit. Okay, let's put it at 1620 and keep on doing that until it gets filled. So you do lose a little if the stock is not liquid. Okay, I think that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.